What it is, gang? It's your boy Q DZ Double Easy. Another episode all about semis. Ow, about your drivers. Well, I figured I'd go ahead and do this video, viewer requests, a little bit on taxes and actually paying yourself. I am not, again, I am not a certified tax or CPA agent, specialist, or accountant or anything of that nature. So my advice here and information I'm giving you is just based off of what I know, okay, and how I do what I do. So with that being said, I suggest you guys do your own due diligence and find out your own information. But again, this is basically on what I know and what I do. So first off, when you start talking about LLC and versus C and S Corp, I'm not going to get into the C Corp stuff because that's just for a whole nother animal and situation. And unless you're some kind of big, like, super mega carrier, you probably won't be a C Corp. And even some of those mega carriers, I wouldn't be surprised if they're just S Corps as well. But that's, again, that's a whole nother animal. Most people are going to fall into the bracket of LLC or S Corp. So with that, one of the number one questions is, well, how do you pay yourself in an LLC? In an LLC, you got to understand how you're looked at the IRS, and you are looked at by the IRS as a disregarded entity. Sorry about that. I'm kind of zoned out. I'm up at Amazon running, working yard jockey for them, shuttle driver. You guys know, if you've been following, I've been doing that for the last, about this week. I've been doing that. It's one of the contracts that I have with them when I'm home, and it definitely keeps the money coming in locally when I need to be home. Another video, another time. Okay, so with that, you got to understand how they look at you, and if they look at you as a disregarded entity, as a LLC. So your tax benefits are not going to be really much, because what happens is when you make a profit, it basically passes to you as the owner's individual tax return, because all that income is taxed. It's basically an individual's tax returns, just like a regular sole proprietor. Sole proprietor is kind of the same thing. That means that everything's in your name. Only difference is it's all in your name. You're not protected under the LLC when you are a sole proprietor. Now, with that being said, all that money that comes in, it passes through the owner's individual's tax return, and it's subject to income tax based on your tax bracket of how much money you made, and self-employment taxes is also you're hit with when you're just a regular LLC. So this is what happens, you know, basically in the default scenario as an LLC. So basically that just means when you're LLC, that's pretty much how you're going to fall in. All the money that comes in is taxed. They don't care. You're going to pay income tax, and you're also going to pay self-employment tax. So you really don't have a tax break. So it really doesn't matter how you pay yourself. If you put all the money in one account, you write yourself a check, or you transfer from your bank to yourself, it really doesn't matter, because that money is taxed already, and it's all going to be taxed, which is going to tax you at a higher bracket. So yeah, you'll still get your write-offs, your business expenses and all that, but you're still taxed, because what's really killing you is that self-employment and income tax, and the self-employment taxes was really killing you. Now with an S Corp, and usually most guys that want to go S Corp are going to go in S Corp because they're starting to make more money. They're reaching the higher brackets. You know, they're in that 66-figure income. You know, you start hitting those big numbers, and then that's kind of where you want to start thinking about an S Corp, because when you have an S Corp status allows business owners to be treated as employees. So that's the difference. When you're S Corp, you can be treated as an employee to your company of the business. And in an S Corp, the business pays the owner what they call a reasonable salary, and the owner pays taxes on that salary like an employee. So basically, you start getting a W-2 from your business, right? Basically like an employee. Income tax, I think it's FICA tax, yeah, on there. So it's really, you're just paying your income tax and your FICA tax, and then distributions are only subject to income tax. So what I mean by distribution is, you know, like you get a bonus, those things. Holiday pay is subject to only the income tax and not the self-employment tax. So you're saving right there just extra 7% off of your taxes just by being an S Corp. But there's things that come along with that. So for you get ready to run out there and start thinking, I'm just going to sign up and become an S Corp, the filing fees are more every year, and it has to make sense to compensate you for those fees that you're going to incur. And then you have to get set up a payroll company or deal with somebody on the payroll, or some kind of payroll program that you can use to do your payroll. And it's really not that difficult. It's basically you put in what you worked, your hours, or however your system's set up, and you can tailor it to your needs. And then basically they cut you a check, and you can print out your own checks or whatever, the whole 49, and it comes to you. You get a W-2. The taxes are already taken out. It's paid out of the business account to you, but it's just you're paying those taxes out, and you're paying yourself. And then that allows you to, as an employee, to file taxes, and then you have to file separate taxes for the business. That's a little bit more technical, and that's a whole nother technical video. But I really just wanted to make this video to simplify the differences between the LLC and the S Corp. And that was a quick crash course on that. But you really want to know where you are and what bracket you want to be in when you are setting up things. Most people set up as an LLC, and then you can change over to an S Corp once your business starts to grow and whatnot. But the main thing is you guys want to have discounts and protection on those discounts, per have you, on the taxes and things like that. And that's one of the things that a S Corp provides over an LLC. The LLC basically just gives you that protection, so people just can't sue you for everything. But the S Corp gives you a little bit of both worlds with a little bit better tax benefits. All right, so I'm gonna leave it at that. This is your boy QDZ, the Double Easy. I'm getting ready to go ahead and get my dinner cooking. It's quiet right now. Amazon asked me to come in early, so I came in about 9 to help them out, but they ain't got nothing going on. So I'm just kind of sitting here in the truck, and I'm gonna go ahead and get my food cooking, and you know how I do it. I hope you guys are staying safe out there. I hope this video has helped somebody. It's your boy QDZ, the Double Easy, and you have just watched another episode of All About the Semis. Be safe, drivers.